Okay, folks, so we've got three violent things to talk about in today's video. Numero uno is the latest on plays and what the market is doing. Some important updates and housekeeping on what's going on and price target changes. Numero dos, the Ooga Booga update, what's going on with AMC. CEO Adam Ape Aaron went on CNBC with Jim Cramer and dropped some golden nuggets that I'd like to discuss with you. And numero tres, the main entree for this evening, I want to talk about a big catalyst that is coming tomorrow for several of our high conviction plays. And the only thing that I ask before we get into all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, fairly mixed market today. We had the Dow up, the S&P up a little bit. You had NASDAQ taking a little bit of a hammering. ARK Fund took a step back today, but despite that, as a consolation, we did have some big wins today. So to start, our 3D printing play Triple D continued its win today after yesterday's great report on earnings. But of course, as a high conviction trade, we were staying stoic. Let me play a clip in terms of what we said in regards to a beat. If it does, I'd expect a nice rally back towards the 40s. And today it achieved that objective, hitting $40. Keep in mind that there are no overnight successes. We've been covering this for months and it's had so many up cycles and down cycles and up cycles. And we've kept our mouth shut despite the many puns that could be made of the fact that Triple D is working on a regenerative breast tissue. Some would say it's a weird pun that Triple D would be working on that. Not us though, because we're professionals and we're focusing on the process. But Triple D is such a great example of why it's so important not just to have high conviction in your plays, but to be stoic about your high conviction plays. At the end of the day, the stock market is really a numbers game. If you value Triple D, say at $40 or $50, well, every single time it dips to 30 or 20 or 10, you're like, okay, well, that's a great deal. And every time it gets to 40 or 50, you're like, okay, well, I want to start taking profits. But for us as retail traders, it's very, very difficult to build that discipline. What if somebody calls me a mean name on Reddit for being a bag holder? Oh, no. I don't want anonymous user 0563 to hate me because I bought this and it didn't do anything for 3 days. At the end of the day, it doesn't matter if people love a stock or hate a stock. You have to make up your own mind. And when you make up your own mind, you can actually learn from the process if you're wrong and be rewarded if you're right. This is going to be a big player in the upcoming years, but it's going to have many euphoria and dysphoria cycles in the future. So make sure that you're prepared for that so that we can exploit both opportunity. And I'm quite stoic about that. Okay, next, Upstart rallied towards our ZipU price target at 170 today, and this was catalyzed by their earnings numbers, and I'm very, very pleased with them. And last time it hit near its price target, I said, hey, don't be greedy. There's always going to be another opportunity for a dip. You don't want to buy into the euphoria. With the after hours run, it has now hit back towards the mid 160s. Now, I don't know if you bought the dip or not, but the point is that I see this as valued at about 170. But with this recent earnings beat and their recent guidance expectation raise, well, I'm very, very likely going to be raising the price target soon. I know people always want me to raise price targets for stocks when they're running, but I like to raise price targets when the stocks quiet down. If you're already in this and you got a good price point, hey, you did very, very well today. If you're not, hey, there's going to be other discounting opportunities in the future, so be happy about that too. Okay, moving on, the market did give us a few things to work with today in terms of catalyst runners. The most exciting by far was certainly Full C. They had announced positive phase 1 results for their sickle cell disease treatment. We briefed on it 30 minutes prior to market open as always. Upon open, it bounced off the blue price strength SMA line, rallied to 2209, and then broke back below it. In total, about a 60% rally from the briefing price to the highs. Of course, as with everything, how you trade it is key. Are you using the blue price strength SMA line to set your exit, the red directional SMA line, the trailing stop loss? How are you controlling your risk on your trades that don't run? If you find a good catalyst play and then the catalyst just poops out, what are you doing to prevent a loss on that or reduce your downside? Okay, Zev was a doozy. Late to the game on this one, it ran mostly overnight and it only ran like 20% after the briefing, but here's the thing. The doozy is that Zev, a small EV company, reached an agreement for a contract up to $850 million with Berkshire Hathaway's Forest River, apparently to help them deploy up to 7,500 zero-emission shuttle buses. But what was insane about that is that the entire market cap of the company was only like $469 million yesterday. You don't say a $460 million company getting a contract that could be worth up to $850 million? Well, cha-chinga! As you know, companies often trade at multiples of revenue, and EV companies specifically trade at many multiples of revenue, especially if they have revenue coming in, and it still trades below that $850 million market cap. Not gonna lie, I don't know how exactly they earned this contract. I'm surprised that Berkshire Hathaway's company didn't award this to somebody else, and we're gonna be watching the situation to see if there's something weird going on, but in terms of a catalyst play, I really enjoyed this one. Okay, moving on to earnings. Let's go ahead and start with Jumia, the Jum of the Ia. Now, if you're unfamiliar, Jumia is an African Amazon e-commerce player that, while in an extremely challenging market, would have a monopoly over that challenging market at maturity, if it reaches maturity. Jumia was a huge victor of the growth rally earlier in the year, a huge victim of the growth sell-off, then a victor of the growth comeback, and a victim of the growth subsequent sell-off. But despite the fact that a lot of growth stocks have already recovered from that second iteration of sell-off, Jumia hasn't. It's been pretty much stagnant, and it's about to hit those May lows. And I would say the reason is because Jumia fits into the hypergrowth category, which is to say that it's a lot earlier stage. It's interesting how they name the companies because it's like growth stocks do the worst during bad market conditions, hypergrowth stocks do terrible during bad market conditions, and then super hypergrowth do the worst. But then during really good conditions, they tend to grow the most. And by good conditions, I mean a lot of risk on. When people go very risk on, well, those are the periods that you start seeing a lot more inflows into early stage companies. With early stage companies, it's important to give them some time to develop in their market because when you're trying to get off the ground, the numbers aren't going to look super impressive. But anyways, this quarter they had some modest beats in terms of orders, earnings per share, and overall missed revenue expectations. I think that the biggest driver for Jumia is going to be whether they can perform on getting user growth. Users will translate into more revenue and more loyalty, and they reported substantially ramping up marketing investments and introducing newer initiatives to reach broader markets, and we'll see if that pays off in the upcoming earnings reports. But my take on Jumia's earnings is similar to the last earnings. It's fairly underwhelming, but it is an early stage toddler company. But the reason that we like this toddler, even though it's in an extremely challenging market, is because this toddler, if it grows to be an adult, it could take over that market as a monopoly power. It's in a winner-take-all market. The massive amount of struggle it takes to build out the infrastructure to succeed as an e-commerce player in Africa is a huge barrier to entry for anybody that's trying to compete with Jumia. There's no shortage of countries in Africa with rapidly growing economies, and if you think about it, there's a reason that China is investing so much money into that continent, because a lot of the growth rates are so high there because they're at an earlier stage in terms of development, economic development. Again, terribly hard market to conquer, but Jumia is not trading at extremely high valuations. For me, I think that it's worth exposure, but that's just me, right? You have to build your own conviction. Okay, next, one high conviction play of ours that really took off today and gave us some validation was Fisker. This is the play that we've held our price target consistent at $35 through FUD and favor. And today it rallied up, catalyzed by the fact that Morgan Stanley actually went out and upgraded it themselves to $40. They said, "We believe Fisker may be one of the only EV-related startups to actually launch on time and ramp up efficaciously in late 2022, which is a point that we've raised on this channel many months ago and was why I was so bullish on Fisker. Obviously, during any growth crash, Fisker's going to do bad. That's how it trades. But remember, in the long run, the actual company does matter for the stock price. If the company is performing and the stock price isn't, well, that's an inefficiency. But at the same time, it's a great example of how important it is to actually get the validation from yourself, because once Wall Street gives you the validation, the stock has already rallied quite a lot. Okay, next, Ooga Booga AMC. So CEO Adam Aron went on CNBC and had an interview with Jim Cramer. It's worth noting that Jim Cramer hasn't been the biggest ally to the AMC 8 movement. He's been a little bit back and forth, a little bit more negative than positive. But hey, who hasn't been negative about AMC in terms of the mainstream financial media? And the rundown on what happened is basically that CEO Adam Aron stressed that, hey, AMC is done playing defense. They're playing offense now. They just reported a great quarter. They are going to use their massive liquidity to expand and capture the available market for theaters. They've lowered their cash burn. They've properly structured their debt. He also talked about them expanding into offering tickets via Bitcoin by the end of the year. Their entrance into Bitcoin is, of course, mostly symbolic. Using Bitcoin for $10 movie theater tickets isn't exactly going to be a huge win for AMC or for the cryptocurrency, but I'm totally for it, and let's be honest, it's a nice move to show that they're trying and listening to their retail trader shareholders. Quite frankly, my take was that, hey, AMC came a long damn way from the pandemic. I know, movie theater attendance has been trending down for years, but before the pandemic, they had a lot of competition, and now a lot of that competition is out of business, and they're taking their market share. So when everything bounces back, they're going to get a much larger part of that pie. They can use the massive amount of capital to consolidate and control that entire market. Well, even if the market dwindles, they may come out a lot more ahead than anybody had projected. Now, that being said, of course, AMC doesn't trade on the fundamentals, but I do think it's very interesting to talk about how they're using the capital that they got from this whole ape situation to improve their fundamentals. Okay, lastly, what to get ready for tomorrow. Well, we have 4 big companies that are reporting earnings: NIO, EVgo, Clover, and Blink. NIO is struggling with the chip shortage and Chinese FUD. I want to see guidance. Are they brushing off their shortage like their competitors XPEV and Li? Are they making more per vehicle, managing costs correctly? What is their guidance? Or are we in for another setback? Clove, Mr. Clover Health, Madam Clotheston. Are we going to see a beat on earnings that panic short sellers that are trying to crush this down to zero again? With it trading pretty damn close to long-term lows, I can't imagine there's a lot of potential for short sellers to really pound on this more. There's a lot more risk for this to go parabolic again than there is potential for this to go back down to zero. Okay, Blink, charging station, right? What data are they seeing in terms of utilization of EV charging stations? With slowing down production of EV cars in the US, thanks to chip shortages, are they seeing problems? Is that reflected in the numbers? Are they maintaining their expansion plans and promises? How much do they think they're going to benefit from this infrastructure bill that puts a lot of money into growing EV charging infrastructure? And EVgo, recently heavily criticized due to dilution concerns, what do they have to say as one of the leaders in technology and fast charging stations? But one of the smaller players in the race, they are trading pretty low, not pricing in much, so there's a lot to beat here. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on Zip Trader Circle. Also, this video is sponsored by the charming gentleman over at Zip Trader U. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course, our daily morning briefings, where we brief on all the latest catalysts that we see each and every market open morning, well, I'll go ahead and put the link below with a coupon code that'll get you $50 off. That being said, when I go and buy something, I make sure that I get my money's worth out of it, so make sure to take some time to look over the program and identify whether this is something that you're willing to put a lot of work into, because we want to make sure that you're getting your money's worth out of it, and part of that is really on you. How much you get out of it is really based on how much effort you put into it, and I will put the link below if you want to check it out. Anyways, that caps off the video, and I'll see you in the next one.